Hello everyone and welcome back to another Facebook Live here with myself, Philip, and our Chief Investment Officer at StashAway, Freddy.
Hi.
Thanks, Freddy, for being part again this week. I think there's a few things we wanted to address today to everyone. There's a lot of news going on lately, right? Even from last week when we spoke last. A lot of things have happened. There's some turmoil going on in the emerging markets that has been, I don't know if it's just media. We'll ask Freddy actually what he thinks about it. And then there's also tonight possible the next round of tariffs by Donald Trump. So we'll talk a little bit about these market updates, and then we want to address some of the questions that have come up to our customer service team. We have been doing some events. The same questions kind of came up as well. So we want to give another round of tips and some pointers for your listeners to get you on the right way to invest. But Freddy, so let's start first of all with some of the market updates that we come across this week.
Well, as you know, emerging markets has been in focus. Argentina was in particular in trouble last week. The central bank has to hike interest rates to 60%, and just to stop capital outflow, right? And then Turkey continues to have a problem. The deputy governor of the central bank resigned, and interest rates at 18%, inflation is around 18%. So it's just a lot of bad news in emerging markets. It's easy to forget that the whole time among all these noises, the US markets continues to do really, really well.
And I think some of the indicators this week that came out just yesterday actually were actually quite positive, right?
Oh yes, absolutely. The economic numbers continue to be strong. Earnings is still resilient. Of course, there's a bit of noise last 2 nights about what social media platforms would have to do in terms of handling new regulations. There's been a lot of props about election meddling on Facebook platforms and all. But those are very, very short-term events. They have happened before, and the tech stocks went past it, made new highs, it came back again. It's a matter of short-term versus long-term events. Yeah. Now, and tonight we may very well have Make America Great Again with Donald Trump. $200 billion of tariffs may be imposed further to what's already been done.
What can China do?
So, and to be honest, that means that almost all Chinese-made products going to America would be taxed, would be suffering from tariffs. This is probably made in China, just so you know. That's not good for American consumers, right? So in a way, the Make America Great Again policy ends up hurting American consumers most.
So what's kind of your take then on the whole, tariff situation then? Because I know there was a lot of lobbying going on the last week, again, from all the tech companies. There were some of them, right? There are also sporting goods and some, everyone that kind of manufactures overseas.
Yes.
Is that part of why emerging market equities have been drifting down and technology stocks, or is it really insulated more to what's actually going on in these markets?
If you really look at the numbers, even with all Chinese products being slapped with tariffs, the impact on the GDP is very small for China, for America. The impact on inflation is a little bit of a gray zone. It might be anything between 0.1%, according to government, to anything somebody with doomsday scenario, 1%. But either way, those are very long-term impact. It doesn't happen immediately. It's going to be very phased in. So I would say, we gotta go back and focus on the real economic fundamentals. And if you look at those numbers, they are really, really strong.
Yeah.
We have been through this before. In December, January.
Yeah.
I know it's easy when markets were doing well and your StashAway accounts are doing very well. It's easy to forget the basic principles of contributing regularly to your accounts, the basic principles of setting the risk correctly, and have long-term goal in mind with your approach. It's easy to get swayed with short-term media and hypes and news flows, but it always pays better to focus on the fundamentals, and they're very strong.
And they are very strong. But so we already touched this a little bit last week, right? People are hearing the news, especially Thursday, Friday, when markets were quite up. They were hearing again, oh, we are reaching new highs. We talked about, is it another case of FOMO? Now what we've been hearing is, when should I actually take my money out and take my profits, right? And this, I think, maybe you can explain a little bit about the short term. Like, first of all, you should make a case for: am I going to be a trader, or am I going to be a long-term investor who needs certain goals to be met, right? Yes. Maybe you can kind of explain that a little bit better for our listeners.
Yes, that's a very good question. It's at the heart of the philosophy for investing. Are you trading or are you investing? Look, we've been through this before in January and December, and I would say this: StashAway from day one, we always believe in setting the good behavior up front. Set your risk correctly, have a diversified portfolio, contribute regularly when the markets are down. Your funds are buying larger number of units of the ETFs in the portfolios. When markets are up, actually your dollars are working less hard for you. So the best approach is to build up a portfolio over a period of a certain time. If it's 100% of your net worth, we did the math. We recommend 24 months to build up a long-term portfolio. If it's 25% of the net worth, we do it over 6 months. We have always maintained the same stance, because in all back tests that we have done in the past, going through many various economic cycles, crises, it's always better for the investor to not react to short-term events and actually let the dollar to work harder when the markets are down. And when the markets are up, do not chase the dragon, so-called. Do not chase the high, and just really stay very steady, very consistent with things. And I would like to say that StashAway do react. We are not a permanent portfolio platform. We do not react to random short-term events like corrections that we had in January. We are not supposed to react to it. The market did recover. However, mind you, if the market changed course because the economy is also changing course, mind you, we would re-optimize the portfolio. We would change the optimum mix with the latest economic information. It's a free service on the platform. It doesn't cost you anything when we do that.
No, I think that's really important to acknowledge for yourself as a StashAway user, or even as an investor yourself, right? If you have these long-term goals, you should be just steady with your paycheck, right? Every month, add to the funds. Dollar cost averaging into the account makes perfect sense, especially over the long term, right? And that way you don't have to worry about, oh, I'm going out of the market right now because the market is high, or there's a new high, because there will always be a new high, right? Because markets tend to go left, right, and up, right, over time. So it's very important then, I think, to recognize that market timing, or timing the market, is extremely difficult, and even the best fund managers in the world
are struggling
with it, yes. Right? So the right thing to do, if you have a 30-year goal, a 20-year goal, even a 10-year goal, is stick with it and just do as you have planned, right? Numbers, and it's really data-driven. So it's
data-driven, and the thing is, it's not about one asset that you're looking at. It's not one market. In your portfolio on StashAway's platform, well, what we can say is you realize you have emerging markets, a little portion, and you're buying them on the cheap, they're dropping, but you're protected by the better performance in America. You also have protected assets and bonds, right? Different maturity, different investment grades that actually make some money and offset some of the risk in emerging markets. At the portfolio level, you are fine, right? It's not just one market going down or up. It's a very diversified approach that we are trying to construct for you at StashAway. So thinking about your StashAway account like the market and try to time your entry and exit is not the right recommended way to do this.
Right. Yeah, well, again, thank you, Freddy, so much for all the information today. For everyone else that might be listening to this over the weekend, again, please feel free to send an email to support@stashaway.com with any feedback or any additional questions that we might have not covered that you have, maybe about your portfolio or about the market in general right now and what you should be doing with your portfolio. Please feel free to email support@stashaway.com or just give us a comment here on Facebook, and Freddy and I will definitely be attacking those next week, right?
Yes, absolutely.
All right, thank you again so much for listening. I hope you enjoyed today, and have a wonderful weekend. All right, bye.